All right, guys. Welcome back to another episode. Today, I've got Zach Coppinger here. He is a longtime real estate investor. Those of you guys that listen to the Tim Herriage podcast used to work for Tim. That was one of his first real estate jobs. So I'm excited to hear those stories as well. And then, of course, he knows some other people we've had on the show. But as you guys know, when we first start, I like to kick it off with origin stories and talk about how Zach got started and start from the beginning. And then, of course, here's some maybe I don't call them horror stories, but here's some different stories he's got, some advice and whatever things that he wants to share. So, but let's start at the top, Zach. So tell us, man, how did you get started in real estate and start at the beginning?
I'll do my best to get the sequence of events in order. Growing up, my next door neighbor, whenever I was in middle school and high school, he was always home, right? He was drinking coffee on the back porch in the morning, drinking beers in the afternoon when I got back from school. We lived on the lake, so he was always out fishing. I said, man, what does this guy do? He's got the life. And he was a younger guy. So it turns out he was a real estate investor. He owned maybe 70 or 80 rental properties in DFW. He got his start kind of subprime a couple years before subprime crash. So 2005, 6, he was flipping houses. I didn't know any of this whenever I was observing, right? I'm just a kid in middle school and high school. I didn't know the prime buying opportunity that he had and how he built his portfolio, but I saw what he did and I said, man, that's cool. I want to do something like that. And I'd always been interested in entrepreneurship. So I would ask him questions whenever I'd see him out front. I kind of knew what he did at a very high level. And then, ended up going to Texas A&M for college, got my bachelor's in business management. Didn't really know what I wanted to do specifically, but I knew entrepreneurship was something I was interested in. At Texas A&M, there was another guest speaker that came in and spoke in one of my entrepreneurship classes. It was a guy that owned 700 rental properties in Bryan College Station. He was he'd been doing it for 20, 30 years, and he kind of fell into it. His story was he got out of school. He was a basketball player at Texas A&M. Got out of school, was working some construction, I believe, was doing some construction work on a fence on a house, and then I guess the house was for sale, and he had the opportunity to buy it, and there was already a tenant in it paying rent, and he said, I guess that's a good idea. I mean, I can have somebody pay the rent, I can own the house, and real estate in Bryan College Station, back in the 80s was really, really cheap, and the rent ratios to the value were conducive for cash flow. So he bought one, and then he said, hey, I can do more of this. Ends up scaling the whole portfolio to 700 or so, and I started talking to him more after the class. I went to his office. So I'd already had the bug from my next door neighbor. Then I had the bug thinking about it more through college. Then I had the bug talking to this gentleman in my entrepreneurship class. I knew I wanted entrepreneurship in some capacity, but there wasn't an exact avenue for real estate that I saw at that specific point in time. So I went to work for another local entrepreneur that it was a fast food franchisor. So we owned 40 or 50 fast food franchises. And I said, that's entrepreneurship. Ownership of something. I'll be interested in that. I might be interested in that. So I went and worked and managed some of his fast food franchises. Did that for a few years and realized that you are highly dependent upon minimum wage labor for a low margin product. Yeah. And
a lot of teenagers.
Yes.
That sounds like hell, actually. That doesn't sound like fun at all after a while.
So it was
that side of it.
I graduate college and I'm making $40,000 working in a fast food restaurant.
Yeah.
That's a bit of a humbling experience. You got friends that are out working at Deloitte, at KPMG. They've got resumes that allow them to go get those jobs. I didn't have that resume. I was just a business management major. Didn't know exactly what path I wanted to take, but thought that there was some path that I could take. I wasn't afraid of hard work. It was just hadn't found my niche yet. Hadn't found what I enjoyed. So I started to gain some traction working in the fast food business. And the traction was learning what I didn't want to do. What I didn't want to do was franchise fast food restaurants, right? So ended up, after a few years, moving back to Dallas-Fort Worth. Through some mutual friends, came across Tim Herriage. He's been on the podcast. And Tim was not exactly looking for a buyer, but I kind of pinned him down and fell in his lap and ended up buying houses for him. He hired me for, I think, about a year and a half. So through Tim, I learned how to kind of source deals, how to find houses, how to buy houses at margins that worked. And Tim Herriage was officing out of Scott Horne's office. So I officed out of Scott Horne's office as well, met Scott Horne, met a lot of investors through that year and a half or so that I was there. But kind of fell into real estate working for Tim. didn't know where it would take me, but I figured that was my foot in the door, right? I might be able to figure out if that's something that I can enjoy, if that's something that I could scale. So Tim, there wasn't much of a growth path left with Tim. I always knew I wanted to do it on my own. He offered some opportunities to buy some houses together. I don't think I'm that good of a team player when it comes to ownership, just being honest. And he kind of knew that. And I think we were two type A's that would butt heads quite a bit trying to manage a portfolio together. So there wasn't much of a growth path forward. So kind of went out on my own, did my own thing. This is approximately 2015. I get married in 2015. So I didn't have much responsibility. I had the luxury of no kids, not a wife yet. I was blessed not to have any debt coming out of college. So it was a blank slate for me to live lean and figure it out as I go. I'd already learned how to somewhat how to source deals. I had learned how to buy houses. I knew what margins to buy on to make a little bit of money. And most of what we did with Tim was wholesaling. So if you can find someone that's willing to pay 20 grand more for the deal than you got it for, you're doing something right. Like you've got a decent building block and a starting point, right, of knowing how to buy the house. And all of that experience was in single family. So went out in 2015 on my own, slow build up. I've only got, I'm guessing I've got 20 or 30 grand saved up. So it's not like I'm sitting on this big nest egg. It's enough to pay my bills and start to put some money into marketing, but not so much that I can just recklessly go spend 20K on a marketing campaign and cross my fingers and hope that it works out, right? So back then, I remember the marketing budgets. I'm spending $3 grand a month on direct mail, and I'm getting a couple, 2-3 deals a month off of it. The return on ad spend was really good back in 2015. A little bit different than it is today. But slowly start building from there. I remember my first assignment fee that I did after Tim, so on my own, was like $24,000 for a house over in Grand Prairie on Kingston. And that was like a big confidence boost. I had never made that much money in a singular transaction in a month, like really any time in my life, right? And I've always, my wife says I'm addicted to delayed gratification. I don't know if that's, it's better than spending too much. I don't know if it's the best attribute though, because at some point you've got to enjoy the fruits of your labor. But I just kept reinvesting everything. Yeah. My wife, I think we get married. She comes out of college. She's making, I think, $40,000, somewhere right around there. Everything that we're making from the business buying houses goes right back into the business. We're living off of my wife's salary. And I mean, we weren't doing without, but living off of 40 grand, you're not living this opulent lifestyle that allows you to go do whatever you want, right?
But I think that delayed gratification, I mean, that's a big deal. I mean, I think that's something that most entrepreneurs deal with, right? They're like, oh, I haven't earned it, or I haven't earned it yet. I'll get that vacation one day, or I'll do this one day.
The number of times the goalposts have moved that I've moved on, once I reach X, I will reward myself with Y. The number of times those goalposts have moved, I don't know if I can count that many. It's almost like, did I earn it? Did I deserve it? But another piece of it is, if that costs, let's say it's a Rolex that costs $30,000. I can do so much with $30,000. Yeah. How much enjoyment am I going to get from that being on my wrist? I will buy one. I just don't have it yet. And the number of times I've moved the goalpost on that goal is a lot. Yeah. But yeah, you just look at it and say, what damage can I do? I know what return I can make on my money. $30,000 is $30,000 is a lot of money to put into something that's static.
Yeah.
Right.
We've talked a lot about that recently.
We did. I've heard a friend of mine's like, come on, you got to buy your, he's like, you got to buy your wife a nice purse. I'm like, that's a trip to Hawaii. That's an experience. I love my buddy. I feel you. You like, you keep moving the goalpost. Like, oh, just kidding. I'm there, but I'll just wait. I'll do it there.
One thing that's underrated that I actually haven't talked much about is my wife was fully bought in to the vision. Part of that was not blind faith. I think she believes in me. We're married. She wouldn't have married me if she didn't believe in me. But we lived in a 1,000 square foot condo, paying like $1,700 a month rent. We're making high six figures, and we're still living there. Not today, but we did for 5-6 years into our marriage. So the income to lifestyle level, the ratio was very high for the income compared to the lifestyle ratio, and she was fully bought in. She understood, not just understood, she believed in, hey, if we really invest now whenever we're young, we take a lot of the profits from the business and just reinvest them, we'll have the freedom to do what we want to do. Now, I'm a worker. I think there's a lot of purpose in getting up and doing something, right?
Yeah.
I don't think I'll ever stop that. But it's the choice of being able to work and not the demand of having to work that provides
Correct.
freedom. To
Yeah.
me, freedom is not I'm not going to work today. The freedom is I get to go to work today. I don't have to go to work today.
Yeah.
So not all of my friends have wives that are that bought into what their vision is. But the flip side of that is I didn't just willy-nilly say, hey, I'm going to go buy real estate.
Mhm.
I hope it works out. I was very pointed in the investment thesis, in my diligence and talking to people. Scott and Tim were people that I gleaned a lot of information off of. So I asked them a lot of questions.
Yeah.
But I wasn't just a leech, right? I wasn't the guy calling, providing nothing in return. I guess you'd have to ask them if they thought that.
But
Or not.
I think
I
too,
didn't
though, I
think
mean,
so.
if you, I mean, looking back, I'm pretty sure I think it's safe to say they probably wanted to help, right? I mean, they probably enjoyed and liked pouring into you. And if you go and do something, it makes them feel good,
I think there's a lot of credence there.
you know?
I've had some people, colleagues, friends, they ask me for advice. I know a few things. I don't know everything. But there's a lot of fulfillment whenever you provide a path forward in information and people use the information. They go
Right.
do something with it. It's that's satisfaction and payment for me is whenever I get to see my friends succeeding with information that I shared or some kind of counsel that I gave.
Mm.
But then you get people that ask for it and then do nothing with it. It's
Yes.
like, hey, like it's right there in front of you. What are you
Yeah.
waiting for? I don't know what's standing in your way.
That's
but
the ask hole.
Hole.
They ask a bunch of questions, and it's just that's the ask hole. Yeah. No, you're right. I mean, it's that's and it's hearing your story, kind of how you started. It makes me think of just jujitsu wise. I know we talked about jujitsu before we started, the podcast, but I remember looking and seeing like the way that they lived in jujitsu and was like, oh man, these guys don't really work. They just wrestle all day long. How much fun would that be? And so I hear you, and I'm like, I see that. Like when you said, hey, this guy's out here on the lake, he's fishing. So somewhere in there, you just clicked that later on you were going to come back to that.
I didn't finish the story. So the hindsight I have now is I didn't see him build the portfolio. I saw him living off the portfolio.
Right.
So I'm not afraid of hard work. I just had no concept of what it was going to take to build a portfolio. And his process of building the portfolio was different than mine. I remember the stories he would tell me. Now having some understanding of what it looked like, the landscape looked like in 2008, 9, 10, 11, he said he'd jump on the MLS in the morning. He'd find a few houses to go look at whenever he wanted to work.
Mhm.
And he'd go look at houses that had been listed for 60, 90, 120 days. And there was just no liquidity in the market. People couldn't buy. And the house that had sold for 120 3 years ago, he'd go buy it for 50, for 40. And he built his portfolio, a lot of it that way. Not all of it, but a good portion of it. And I got started on the very tail end of that, kind of in 2013, 14, and 15. But he was able to build a bulk of his portfolio whenever there was limited liquidity, which meant limited competition. And I remember in 2015, I thought, man, there's so much competition. How am I going to build a portfolio like he did? Now the competition, was just a steep ramp up from 2015
Yeah.
all the way through 2022. You just adapt to your market conditions, right?
Yeah.
And I remember also the misconception of I'm going to build a rental portfolio of 100 houses. That's what I wanted to do.
Mhm.
I got to 40 in my 20s. I was up to about 42. And the cash flow was very poor. I'd bought some with significant equity. We're talking a portfolio that's levered at 55, 60%. And it was barely above cash flow break even. We were barely in the black. And I thought, man, I thought that if I had 45 rental properties, 42, whatever the number was, I'd be making a couple $100,000 just sitting here doing nothing. And man, that was not the truth. The single family rentals were very, required a lot of my inputs. You hire a property management company, but if you let the property management company use their vendors, you're paying yellow page prices. So that wipes out any potential cash flow that you were going to have.
Mhm.
Property taxes are eating your lunch. So then you got to go protest your property taxes every year. You can hire a group to do it. They won't do as good of a job as you will. And they'll take 40% of your savings. Insurance costs are going through the roof. My outlook on holding property has changed, and it's changed from it does need to cash flow, but this is not going to be my source of income. My source of income has to come elsewhere. That's going to be my equity builder that I can choose to do with that equity what I want. I could cash out refi, pull that money out tax-free. I could roll that into bigger deals. So whenever I changed my outlook on what the portfolio was going to be as far as holding property, I feel like I realigned kind of what the future would look like for me. Because I had been living this thought of, it just needs to stabilize more. It's just not stabilized enough yet. And it does take a while to stabilize a portfolio, but it's had long enough to stabilize. And they're just not cash flow machines.
Did you look more of it as you went along, more of a, almost like a big monster savings account per se? Like, and when I say savings, not like you're like savings like for a rainy day, but just let it just build itself.
Savings account that's very hungry.
Right,
Because
right, because it needs some.
it needs some love.
It does
and
need some love. Like
it
ACs
needs
and
some cash inflow.
it needs some air
needs some cash
conditioning
injection
units.
sometimes.
Yeah.
So I just remember projecting out on paper, hey, if I buy this many properties this year, do the rehab, get them stabilized, I'll be producing this amount of income. Then I can go reinvest and do more here. It always took so much longer for that to actualize, for that to actually stabilize and become something that I felt confident wasn't going to need a $20K injection tomorrow.
Yeah.
And even with the rental properties, we'll get into owner finance notes here in a minute, because that played a large role in balancing my portfolio. But I didn't do any owner finance notes in the beginning, and I was just doing rental properties and wholesaling a little bit, flipping a tiny bit. So the wholesaling and the flipping was supplementing the marketing budget, was putting some cash in our pockets to be able to run the business. Meanwhile, living off of my wife's salary, just kind of reinvesting everything, and then building up some cash reserves to go out and buy rental properties. So I think built, I'm going to guess 20 to 25 rental properties, and then looked. My father's a CPA. He's pretty heavily involved in my business. He was kind of nearing the end of his W-2, where he wanted to stop working for the man, if you will, stop going into downtown every single day.
Yeah.
But didn't want to stop. Didn't want his mind just to kind of waste away. He loves to golf. So we found a great hybrid where I got him a workstation at home. He can golf whenever the heck he wants, and he can continue to kind of exercise his gifts with organization, with finance, with the books, and he keeps our back office. But we sat down and he said, Zach, you're working a lot, and these rental properties, they're gaining equity, but you're not making much money. So we looked, and the portfolio, I think, was net up somewhere around $100,000 over a few years. With me leaning pretty heavily on managing all the contractors going out to do the maintenance work, going out to do the CapEx, helping manage the management company, because they'd send you a financial statement and they'd have some kind of mistake on there. You got to go ask them questions, get documentation, figure out why you got charged that. Oh, it got mischarged for the wrong property. Okay, I need a refund. Oh, it didn't come this month. I got to follow up again. I got to get it next month. There's just a lot of work that goes in. It's not passive. You're not there every single day, kind of pressing on the asset, but you're present every day.
Yeah.
It kind of sounds like I'm talking out of both sides of my mouth, but if you just let your portfolio go and leave it and don't touch it,
Oh yeah, it'll fall apart.
it'll fall apart.
Yeah, absolutely.
And it doesn't even stay together that well if you're on it every day, because you've got tenants in there beating the stuff up. Right?
Yeah.
But we look at it, and I had originated, I think actually 2 owner finance notes somewhere around the 25 single family rental mark whenever I had that in the portfolio. And those notes were paying out really well, very consistent. We had qualified the buyers well. And that was actually producing cash flow. The underlying debt was fixed. The debt that I sold on was fixed. The wrap note was fixed. So there was a defined cash flow each month. And as long as the borrower performed, I could rely on that income. How reliable were those borrowers? I didn't exactly know yet. But talking to people like Scott Horne, who I had seen execute the strategy, it was consistent enough. So if I tried to emulate what someone that had done it successfully before was doing, I figured I could make a go at it. So kind of started to originate some more owner finance notes for assets that I didn't think fit really well as rental properties. You had a 1950s, frame house. That thing's going to be a CapEx nightmare. If you hold that as a rental property, you've got an asset that's 70, 80 years old.
But if someone else is buying it.
But if someone else is buying it, and they're also living there, they have pride in ownership, and a lot of these people are tradesmen. They have the ability to tinker with it themselves, right?
Yeah.
So started to kind of transition assets that were coming in through the marketing that weren't great fits for rental properties, turning those into owner finance notes. And that ratio of keeping rental properties to building owner finance notes drastically flip-flopped. What I what I failed to recognize was I was enjoying all this depreciation over here with the rental properties, helping offset the income from wholesaling, from flipping. Whenever I quit pressing on the rental property portfolio build as much and started building the owner finance portfolio, cash flow went through the roof, and the portfolio really stabilized. The owner finance notes kind of flattened out the ups and downs of the rental properties with the big CapEx infusions, right? And these borrowers were performing really, really well. We still to date have not had to follow through with a foreclosure on about 80 notes. We've gotten close. We've had one file BK at the courthouse, and then they ended up paying it off a couple weeks later. We were all moved on down the road. But it was proving itself to be very, very consistent. So then I said, I'm just going to press on that more. I pressed on it more, ran out of depreciation, filing taxes. What year was that? 2020 or 2021. And I'm staring at a huge check I got a stroke to Uncle Sam. And, my dad said, hey, you tried to play both sides of the aisle in the beginning. Then you just went head first into owner finance notes, which is just interest income, right? There's no tax benefits. There's no ownership. You've just got paper. You own personal property. And I really enjoyed the cash flow. I really despised having to stroke that big check to Uncle Sam. So then, remember, I was 100 single-family rental properties. That's all I want. I can pass those on to my kids. I'll own them forever till I die. Once I do that, then who knows what my life's going to look like. Got to 40 and said, this isn't the life for me. I'm not just going to do 100 single-family rental properties. Started building the owner finance portfolio. And then whenever I had to stroke that check, I said, there needs to be balance in the portfolio. And I've just been kind of teetering back and forth between heavy rentals, heavy owner finance notes. I need to find some balance. And then I started looking at a metric called return on equity, which I hadn't looked at before. Equity was this thing sitting on my balance sheet that was very comfortable, right? I've got a whole lot of equity in these properties. Example, I would buy a property in Garland for 80 or for 70, put 10 into it. My basis is 80. It was worth 140 whenever I bought it. It's now worth 260. I mean, the apocalypse has to happen for me to lose something on that, right? I could lose the equity, but to actually go underwater, something drastic would have to happen. But with that much equity sitting there, the cash flow is still minimal. Rents hadn't increased at the pace that the values had. And this is in DFW. The values have far outpaced the rents. Property taxes are up, insurance is up. And I said, I am making low single-digit return on that equity for that property. I had bought at wholesale pricing. I had executed the value add plan. The only additional value left to be created within that property was additional market appreciation. And we had been on a crazy run of market appreciation from 2015 to 2022, 2023. So back in 2021, somewhere around 21 or 22, I made the decision to start selling off some tranches of those single-family rental properties to trade up into bigger assets, self-storage deals, apartment complexes. And the goal was, at a high level, I bought value, I stabilized, but then I needed to trade up to buy value again and stabilize and get some additional forced appreciation and keep that cycle moving every 4 or 5 years. I had never thought of the velocity of capital until that point in time, because my original thesis was buy 100 and sit on them.
Right.
And that's a path to good money, right? But it was kind of, it almost sounds a little rich to me, but it was getting boring. Like I did it and I didn't love them. I didn't love managing them. They weren't a lot of fun. And I wasn't making any cash flow. And the equity, the only way it could continue to grow was market appreciation, which was definitely going to flatten or slow. We couldn't continue at the same pace that we were on.
Would you try to pay some of them off on the rental side? Some people don't pay anything off. They let the tenants do it. Or what was your thoughts?
I was not accelerating appreciation. So we'll come back to the trade up, but I've got an interesting opinion on the balance of risk versus risk pay down versus just running out your amortization. So on the rental properties, I didn't accelerate principal at all. I just paid whatever the mortgage was, and those were usually 20-year ARM loans. The market was appreciating so fast that I didn't feel the need to pay down to aggressively reduce risk, because the risk was being reduced by the market doing its thing. Right? Whenever I was originating owner finance notes, I was collateralizing the note, or I was putting underlying debt on the note before I sold. So if I am selling off the asset, I'm selling on a fixed interest rate. the interest rate I'm borrowing on is usually a variable rate. There's some kind of fixed period, but that debt can change interest rates over time. So I'm selling on a 30. There's a fixed income stream and a fixed timeline. I can't just arbitrarily charge the borrower more if my underlying costs go up, right?
Right.
So I was selling on a 30, and I was taking out 15-year loans. So I was aggressively paying down. I didn't accelerate principal per se, but I was paying out twice as fast. I was paying down twice as fast as I was receiving. So during those first 15 years of the owner finance note, the balance sheet was actually growing because I was paying off principal a lot faster than I was receiving principal, right? And I said from a risk standpoint, I would rather reduce cash flow a little bit, pay down the underlying debt faster. That way, there's insulation there in case my underlying debt interest shoots up to 9%. What are we sitting at today? I couldn't control that. What I could control was if I can still cash flow and meet my debt coverage requirement, and I can still cash flow in the portfolio and make a few $100 cash flow a month on a house, I would rather, especially being a little bit younger, I can take the hit of less cash flow for paying down principal faster today.
Yeah.
So that's what I did with the owner finance notes, was pay them off a little bit more aggressively. But the rental properties, I didn't accelerate principal pay down on those.
You let them do it. You let the tenants take care of that one.
Yeah. And I thought, okay, I'll own them free and clear eventually because I just want 100. But then after 5 or 6 years, I said, I don't want 100. And I don't want to own them forever. I don't want... You'd have to hire some in-house staff to be able to properly manage 100 rental properties, even if you have a third-party management company. There's no way. If I did that, I would spend all of my time trying to manage the management company, managing the portfolio. I said, I want to build the business. I don't want to just maintain something static. It wasn't fun. It wasn't enjoyable.
I think something that you said that I like, that kind of going back to just, the way you guys started or the way you were living, where you're like, hey, we're living off my wife's salary, and you said it because some people get in this and they're like, oh man, if I buy all these properties, I'm going to have all this money. And, you hit it on the head. It's not always like that. There's, but something I like too is you're talking about that, how, because we did that, lived off Misty's salary and things like that as we built the business up and went further, So let me ask this. I want to back up on kind of like your wife's buy-in, because that's something I think people, and you mentioned it, and I agree. I see all sorts of people just, they get, their wife's not bought in. And you said she was pretty much bought in at the time. Did you have to explain things to her and say, hey, honey, this is how we're going to do it? Or did you kind of have to go through it and she's like, I'm not really sure. I don't mind doing it. Or did you have to kind of like really dig in and say, this is how, like how'd that kind of go about for you guys, as far as getting her bought in and understanding and because that's a big deal.
It is a big deal. It helped that she's not a natural spender. So it's not like I had to rein in and say, we can't go live the lifestyle that you're used to living for the next 10 years.
Yeah.
We didn't have to really change lifestyle too much because we were just college kids that we didn't have a lot of money, but we didn't have debt. So it was just...
What does she do?
What does she do now? She stays at home full time with her daughter.
Yeah.
But there was a period of time where she worked in our business.
Yeah.
So coming out of college, she worked for a 401k benefits company and made about $40,000. Worked there for 5 or 6 years, and she did not love that work. That was not what energized her.
Yeah.
But she was the base for what we were doing. And she wasn't a major earner. $40,000 with a college degree is not some incredible amount of money.
Yeah.
But it provided a check every 2 weeks that allowed us to reinvest
Stability.
everything into our business. And I think she struggled a little bit sometimes with the value because the business took off pretty quick. I mean, we were making 6 figures in the business within the first year on our own, I think, year and a half. Yep. And I was getting a lot of the accolades, just to be completely honest. The family, you're doing great, you're building this business, and she's over here. Well, I'm just working at a 401k company. And I would constantly tell her, you are building the base for us to be able to go do this.
Right.
Do not minimize what it is that you're doing. And I still think to this day, without that kind of consistency and that base, that wouldn't have provided the stepping stone to be able to build the business the way that we did. So she was naturally not a big spender. So that wasn't something that we had to have long discussions about or rein in.
Oh.
But this is my opinion. I instilled a lot of confidence in her. It wasn't this. I wasn't always jumping from thing to thing. Oh, I'm doing this. Oh, I'm going to build an Amazon store. I'm going to go sell solar. It was like I honed in on this, right? And I instilled a lot of confidence, and I was always talking to her about it. And I mean,
Yeah.
I think at some point her eyes were glazing over. It's like, no, geez, Zach, like just go do it.
I'll go to work. Stop.
Yeah,
Just
but
stop.
I think that she saw how passionate I was about it. And I think that allowed her to say, you know, this isn't just a fling. He's not going to jump to the next thing. He's not going to, he's got some real passion here. And I think he's got a natural bend towards it. And I accelerated in the position with Tim buying houses pretty quickly. So there was just some confidence there. So I think it was a mixture of the two things. She was not a naturally big spender. So we didn't have to rein much spending in, but we did have, conversations of what we make. We're not going to increase our lifestyle. We're just going to keep living the lifestyle that we are. We're going to live off of your income, and we're going to aggressively reinvest. Take those earnings, move into retained earnings, and just keep reinvesting in the business over and over and over again.
Did she know you, or were you guys together when you were working with Tim as well? So did she kind of get to see that part of
see that part of
what you were doing and saying, okay, so now we're going to do it on our own?
Yes. There was confidence from the kind of proof of concept that at least in some capacity, I knew how to identify a deal. I knew how to run numbers on a deal. And at this point, whenever Tim and I split, I don't think that I was married yet. I think we got married a few months later, if I'm remembering the sequence of events correctly. So the amount of responsibility was very, very low. From my next door neighbor to the guy that owns 700 houses to multiple significant real estate investors since, I've gotten a consistent theme of advice from all of them, and it is, I wish I would have started sooner.
Yeah.
I feel very blessed that I was able to get that advice at a young age and apply it. And I think a lot of people get the advice at a young age and don't apply it. Either they don't know how to, don't have the gumption to. I don't know what it is. Perhaps I had the gumption, perhaps I had the vision. I don't know. I just took the advice, and I think I started in my mid-20s, like 24, I think it's about the age. And that was the best thing I did. The two best things that I've done was get started at 23 and not sell off deals that had like rental properties. If there was a $40K assignment fee that I could have made, or I could have flipped it for 60, I took that 60, that hypothetical 60, and just moved it to the balance sheet. I kept it as a rental property. I didn't go make the 60, go buy a Lexus, go do a lot of the things that a lot of people are doing.
Yeah.
There's a lot of different ways to do things. I'm not saying you can't be successful if you have to not spend anything to be successful. Not what I'm saying, but there's a proven path of if you can delay gratification, you can take earned income, move it to the balance sheet, move it into equity, and just let it sit long enough in real estate. You can write your ticket.
Yeah, you can do some damage.
You can do some damage, yeah.
So let me ask this. Just kind of before I ask it, just the wife subject. That's such a huge thing, because I feel like so many guys get caught up where their wife doesn't want to move forward or help, and I just hearing that, it's nice. Like it sounds kind of like her and I were like, I'm sure she gets glazed over after a while. Going, okay, I'm tired of listening to him talk about that stuff. But it's there's a partner can make or break you, and
this is going to be a little controversial, I think, but in my opinion, that's weak leadership. If your spouse doesn't believe in you, there's probably a bit of a reason.
Oh, I agree.
And I think it's leader, get the hell out of the way. That's how a lot of women are, and that's fine. I think women should press on their husbands more, their significant others more, to say, do something, prove something. I was not afraid to take risk, but take measured risk. It wasn't like I was just throwing caution to the wind and saying, honey, we got 20 grand. We're putting it on black or on red this month, and I hope it turns out. Like there was a plan, there was a vision, right? Yeah. I didn't have to. I had a natural head start because, like I said, she wasn't a big spender. We didn't have this lifestyle we were trying to maintain, and we didn't have kids. We didn't have this overhead that I do have today. It would be much harder to start it today than I did back then. Not impossible, but much harder. So I feel very blessed that my wife was bought in, but it wasn't just this blind faith.
Yeah,
I instilled a lot of confidence in her, and it's because I was willing to lead. I think a lot of men are afraid to lead today.
Yeah, I agree. You see it where guys are like, they don't want to jump out there, or they're concerned.
They're on the fence. They
just
sit on the fence.
Yeah.
I've got some friends that have wanted to invest in real estate, and their wives don't. They just can't get their wife on board. It's because you hear them talk about it.
Yeah.
I think I might get involved in real estate. I think flipping a house is probably a good idea. You're not inspiring any confidence in me.
Yeah.
Like I could put a crazy good deal in your lap, and you could screw it up.
Yeah.
Because you just haven't done the research. you're not ready to capitalize on the opportunity. You wouldn't know opportunity if it was in front of you, and it's because you haven't done the preparation.
They're worried about what they're gonna hear when they come home because it's I gotta talk with my wife about it, and then versus like, hey honey, I bought this. Just want to let you know. Like, you bought what? Deal with it. This is what we're gonna do. Yeah, I agree. I agree with you. So let me ask. I want to talk about the Tim, just working with Tim and being around Scott and then kind of that growing up years. We're gonna reminisce here a little bit. So, kind of tell me some of those years. Talk about that. Like, what was it like? Because that's not something that most people get to do. They don't jump into where they have people like that. I know when her and I started, we just didn't. It was 2010. We're just buying hold investors. We just bought hold. It was our way of building retirement. We weren't around anybody. We weren't. I mean, it wasn't until later that we actually got to meet individuals and started to like, oh, you know what? We got to do more and get around more people because early years it was just like, all right,
Try to figure this out.
yeah, we just try to figure it out. Whereas someone like yourself, I'm sure there's plenty of people out there that just have to figure it out. Whereas like you almost went to school to a degree, like, you know what I mean? You went to real estate university and got to spend that time. I want to hear more about that time. Like, what was it like those couple years that's where your day to day, you go in and, what was that like?
So I didn't know what I didn't know. I feel like I just got placed in the right position because I know I wanted to own property. I knew that. That was my interest in real estate. I didn't know what wholesaling was. And that's mainly what Tim was doing when I started to work for him. But Tim had a portfolio that he'd built. So I wasn't dealing strictly with a wholesaler. But I didn't know what Tim did. I thought I was buying houses for Tim to go rent whenever he hired me. I didn't know what I was doing. I knew that I was trying to buy houses. I didn't know what the exit strategy was.
Yeah.
So he opened my eyes up to wholesaling.
So you'd find the deal, bring it to him. He's like, all right, thanks, Zach. I'll take care of it. I'll take it from here.
He would do the marketing. I would go on the appointments. I would try to lock the property up at a price that was feasible for us to have multiple exit strategies with. There was a dispositions guy in the company who would then wholesale the houses and sell them out. So it didn't take me long to figure out what it is that we were doing. But I was kind of blind going in. I thought, I'm buying houses for this guy to rent or flip or something. I didn't know that it was strictly transactional or almost all strictly transactional. But he was someone who had built a portfolio and managed a portfolio. So there was insight there that I would always ask questions because I knew that's my end game. It's what I wanted to do was build a portfolio, own a portfolio. So he'll tell you if you ask him. I asked a lot of questions.
Yeah.
I tried to exchange value. I mean, I bought houses for him and made him money,
Yeah.
but I never wasted the opportunity to go ask that guy a question. Same thing for Scott. And I saw Scott. Scott was not much of a wholesaler. He was building an owner finance portfolio. That's what he was doing whenever I was working for Tim. And he was just right down the hallway. And Tim actually worked for Scott whenever Tim was early on in his career. So they had all this playful banter. They were like older brother and younger brother kind of thing. But Scott's strategy was very different from Tim. Tim was pretty set on rental properties. He didn't really like the owner finance stuff that much. If you ask him today, he still says they're declining income streams, which I don't disagree with, but they are cash flow balancers for a portfolio, in my opinion. But I got to hear Tim's vision and thought on 40 free and clear houses by 40. The number of times I heard him say that working for him, that was his goal. I think those goalposts have moved. They've evolved. But he was real big on own the asset. You've got control. You've got equity. You've got options, right? And then Scott loved the cash flow of the owner finance notes, and the cash flow is pretty good. And he owns the law office that closes them. He's got this vertically integrated system where he's kind of an ecosystem for everybody.
Yeah, he's built his own little.
And because he's an ecosystem, he's closing deals for lots of different people. So while I worked there, I was meeting tons of investors that were coming into close, tons of investors that he had relationships with. The same thing for Tim. I think Tim hosted some kind of meetup or networking group. So I would go to the networking groups, meet investors that he knew. He was pretty well known in DFW. So I got some good exposure to real players in DFW that were actually doing deals. And done my best to maintain those relationships, through to today. And that was very beneficial. Yeah, getting good exposure. So there was just some blind luck there that the guy that I worked for was someone who had a portfolio that I could ask questions to for how to build, how he did it. And also someone that was well connected. I didn't know those things going in. I just knew some guy was willing to hire me to buy houses for him. Yeah. And the rest was just good fortune, I guess.
But you took the advice and used it. And
yes.
That's something that's so huge. He could have had somebody else in that position. I mean, I don't know who was part of the company, but there's probably someone else that maybe on the disposition side, the individual said, I'm done, thanks, and didn't use, you know what I mean? You moved forward, where had that been someone else, instead of being Zach, it could have been Bob or Joe, and they would have been like, all right, that was a fun job. And
So I
I'm gonna
think
do
what
this.
got me hired and what also got me kind of pushed out at the same time, it was kind of a Tim coming to me at the end and saying, hey, there's not much. Like, you don't want to build a portfolio together. You've said that. So what's there left to do here? You probably need to go out and do your own thing. I told him before I started working for him, I said, I'm not going to work for you forever, and I want to go out and do my own thing. So I was vested in learning as fast as I could.
Yeah.
So that made me pretty successful working for him. I think I did a good job for him. But also, I just neared kind of the end of what growth path there was with him rather quickly, because I was so interested and invested in learning. I think it was about a year and a half that I worked for him.
Yeah.
But we have a great relationship today, so there wasn't really there's not any animosity, but it was just there's not much left. Like, you've told me that you don't want to buy houses with me. That's what I told Tim. I don't want to own them together. I want to own them by myself. So.
You a kid that grew up, and it was
Yep.
time to leave the house.
Yeah,
I mean, that's why I look at it. It's time to leave the nest.
I
at that
actually don't
point.
know if he and I have talked about this.
Yeah.
It was his idea. Hey, I don't know that there's much left for you to do here. You probably should just go out and go do your own thing. I always knew I wanted to do my own thing. It's tough to know when the right time is. And I didn't think that was the right time, but he told me it's not the right time for you to be here. So I went out and did my own thing, and it was the best.
Yeah.
It was the best.
He was probably
best move.
He was probably
pushing you to start young.
he was probably pushing you out, whether you knew it or not, to go, you know what? It's time. Like, you've done a great job, and me holding you here any longer isn't going to help you. It's time to move on. I mean, usually when you help somebody, there's always those individuals when you help, you want to see him go further. So you're trying to make that way. And he probably made some way for someone else to come in that was going to maybe stay longer, and not stay longer because you shouldn't have stayed longer, but stay longer because they just weren't going to go, and they didn't want to build their own thing. They just were going to kind of, just kind of unplug you and say, hey, go kill it. I've done everything it's Padawan's becoming the Jedi Knight. It's time to go do your thing.
There's, because of the way my brain is wired, I do not understand someone that wants to come in and be part of something and not be the person, like be a part of something being, I want to be a buyer for a real estate investor for 15 years. I don't understand that mindset. Yeah. For better or for worse, whether I'm worse at it or better, like Tim could have been the best operator on the face of the earth, and I would have said, I'm going to do my own thing. There's just this thing in me that says, go out and do it yourself.
You don't have the worker mentality.
No, I do not.
Yeah. I get you. Yeah,
I
would not be there for 15 years either. I mean, 12 months, 18 months, soak it all up and go. I would have done the same thing. I mean, it only makes sense.
I have a friend of mine. His company recently went under. Not real estate investment, but he was an entrepreneur. His company just didn't do very well through COVID. And I think he's going to have to go back to working for somebody else. And I was just thinking, my gosh, how would I do that?
Yeah.
How would I go back and work for somebody else? I could. If I've got to provide for my family, I got to do what I got to do. Yeah. That being said, that would be the hardest thing that I'd have to do is.
You're unemployable.
Yeah.
You just became, literally at some point, you're like, I'm just unemployable. Because I've always thought that. I'm like, man, how would someone go and learn? And I'm sure there's guys out there that's just their job, just buying houses and for someone else. I'm like, that would be wild to me. Someone that, in fact, we've had that conversation. Someone that we know that they were doing disposition for one of the big wholesale companies, and I'm like, you're not taking any notes on any of this stuff. Like, you're just all right. You're just making cold calls and making calls to try to dispose of these properties. Like, why would you?
They only know half the process.
I'm like, that's fine. Half, figure the other half out. And you got to experience, why would you not take advantage of that?
I was only involved in the acquisition side. I had nothing to do with dispo.
Right.
Nothing to do with the marketing. I was asking every question under the sun. I was asking the dispo guy. Who are they? How do you know them? How do you find them? How do you know how to price a property? I had this cheat sheet of notes, and it's not like I was trying to steal information. I was just asking. I was wanting to be edified. I wanted to learn, right? I wasn't sitting there coasting, going through the motions. I was just devouring every piece of information that I could from all aspects of the business so that I could go apply that, because I knew I wanted to go do my own thing. And there was no complacency. There was always trying to just learn and take in information.
Yep.
What's funny is your story, your origin story is similar to what Tim had kind of talked about. He's like, he started out doing buying houses for somebody, for a guy that it was the home investors.
Hmm.
And then he's like, all right, it was about the same time frame. He's like, no, I think I want to do this on my own. And it's the same thing. So he probably recognized that same thing in you. Guys recognize that stuff. I'm sure there's probably people you work with or that work for you, and you're like, you have a lot of potential. I'll
Hmm.
pour into you, but you guys over here, maybe not. We'll let you do your thing. But this person, I hope to see you
I
move
think what a
on.
lot of people miss is the Tim didn't groom me. Tim
Mm.
was there, but I took the initiative.
Right,
So it's not like anyone that went to work for Tim would have the same growth path that I did.
right.
Tim um, was willing to teach, learn, and help me grow, but it's not because I showed up on Monday and just sat there, right?
Right.
It takes the right kind
Absolutely.
of person where they say, okay, this guy can do something with it, right?
Mhm.
And I think a lot of people expect for things to just be on a silver platter, kind of waiting for him, versus going and grabbing it, going and getting it. I waited for nothing.
Yeah, you went and got it.
Yeah.
No, that makes sense. I mean, you're gonna, and then when someone sees that, they're gonna lean into that.
Yeah.
He's gonna lean into it and say, "Hey, man, this guy's acts just,
Yeah, he
you
probably
know."
saw a lot of himself in you.
He's like, I gotta show him and then kick him out, and not in a bad way, but I gotta show him and send him on his way, and then he's gonna do great. And all you guys over here, just keep doing what you need to do, because we're gonna keep this train rolling. So it's you went to work to learn, and not just to make money.
The money was a byproduct of the learning.
Yeah.
And while I needed to make money at that point in my life, I still my overhead was low. We talked about that. The value that I gained by working for a year and a half, looking back on it, I should have been willing to do that for free. Like if there was a question presented to me with my knowledge that I have now, go do that for a year and a half and earn nothing. Go live at your parents' house, live on a friend's couch. Would I do it with the information I have today? Yes. It's
Mhm.
hard to have that vision whenever you're that young, right? Because you just need to make some money to put
Yeah.
gas in your car.
Yeah.
But do what you got to do to figure out how to learn something. And if that's donating your time for free for a bit for someone that's actually doing something that you can really learn a lot from, be willing, like be humble enough to go do that, right?
We
Especially at a
talk
young
about
age.
that a lot
Yeah,
too.
I think a lot of people miss that. There's so many people that miss that, where they just, like, instead of just working for free, you're either working to earn knowledge or earn money, and that knowledge is way more important, than that money. I agree with that. That's a huge miss that I think a lot of people have, especially young. I was always told at a young age. I was like 16, 17, being told, go to work to learn. You don't go to work for any other reason. You go to learn. And if you ain't doing that, you know, it's
My trajectory of education, I was not a stellar college student. My
yeah.
GPA was, probably 2.4, 2.5. If you asked me where my transcript was, I got no idea. I just was not a stellar college student. I did well in high school, but the information was not interesting to me in
Mhm.
college. There wasn't anything that was grabbing my attention. I did enough to get a diploma and move on. So I kind of plateaued with learning through college, to be honest. And then once I hit real estate, it was just a exponential growth up.
Yeah.
And I found something that interested me.
Right.
It wasn't like it was forced upon me. It was my choice. I feel very blessed that I got exposed to it at a young age where I could grab onto it and apply it. But I think a lot of people think, oh, okay, I'm done with school. Now I just got to go get a job and figure some things out, get a family, do that. Learning never stops, right?
Mhm.
And my learning hit a hockey stick up after college, like 2 years after college, which is just kind of odd.
Yeah.
Right? I don't know. I've always found that interesting. That if I look back, did college set a foundation for me to have the building blocks to learn? I got no idea, to be honest with you. I wouldn't trade the education experience that I have.
Mhm.
But do I need the college degree to do what I'm doing today? Absolutely not.
Yeah.
For a lot of people, the learning stops after high school or college.
And,
Yeah.
and my learning wasn't necessarily intentional. It's not like I set out from college and said, I need to go learn more. I knew that I wanted to be involved in entrepreneurship in some fashion. I knew that I had the work ethic to do something. I just was kind of waiting for the opportunity. Waiting for the opportunity is the wrong way to say it. The energy was needing to point in an efficient direction.
Mhm.
And it pointed towards real estate, and I got exposed to it, and it all just kind of poured right in there.
Something tells me that you could have probably went without college, still worked in the office, and been the same person. Because the
Mhm.
personality is the personality, right? And I would imagine that that without college, your personality would have been the same. Got out of high school and then been like, I'm working for these guys. I'm going to ask all these questions and then go do this myself.
What's unique today that wasn't as prevalent whenever I was starting in real estate, everything that I learned from Tim and Scott is available on podcasts like these. If you listen to the right ones, you don't have to be working in someone's office to learn those things. That wasn't as prevalent whenever I was working. I think I needed to be able to be rubbing shoulders with those guys to learn those lessons. There's information overload.
Yeah.
The hard part today, though, is filtering who's given the right information and who's given the good information versus who's trying to sell something to you with information that tickles your ear.
I agree with that. And that's what I was saying. Like when we started, just again, our thing was never flipping, fixing, and things like that. It was always just buy, hold, because we had the martial arts school. We didn't want to. I didn't want to be full time in that business. It was just buy, hold, and just let things ride out. There was no podcast. There was nothing to really just go and be like, I'm curious about this. I mean, there was no. I don't even think Bigger Pockets was around at that time. There's just nobody. There's nothing out there that we really could have. I'm sure there was. We'd have to fly out and go, seminars. But I was like, man, I don't want to go fly out seminars. So just kind of learn on the fly, and meeting different individuals. That's actually meeting different investors through martial arts. Like, oh, this guy, he buys multifamily. Okay, he's telling me a little bit about it, and some of it makes sense, some of it doesn't. That's kind of how okay, this guy buys warehouses. You get to kind of meet these investors through martial arts. But that was really our only way. But you're right, there are so many more resources now that you don't have to do.
You said it. You might have had to have flown to an event, back in 2010, 11, or 12. Those events were happening, but the ease of access to that information today, there's such little friction.
Yeah. You just go on YouTube and, how do I?
Yeah.
That's it. That's your phrase. How do I? And then whatever it is, and then bam, something's gonna pop up. And I do agree. There are plenty of individuals out there that they're just selling something. They're like, they want to sell a course, or they want to sell this, or they want to sell that, and they just, instead of just like, hey, here it is. Like, we don't run ads on this thing. It's just, we're paying in to the podcast. We're not getting paid out. For us, it's like there's no selling of anything. It's just, it's here, and there's so much value you can give. And I think that I agree with you on that there's just a lot of information. It's who you're listening to, who you pay attention to. And just the conversations and stuff. I think that's huge.
I've had a lot of friends, colleagues, even just some people I don't know that I'm in real estate ask me, who do I listen to get good advice? How do I know if I'm listening to someone who's just a fraud that's, they've rented the Lamborghini for the day that makes them look cool, or how do I know who's actually like a real operator in the space? I said, part of it's judgment. Part of it is I have a different eye than you because I'm in the space, and I just kind of know. It's not that hard to tell if someone's real or if they're faking it. But if the person that you're trying to learn from is not a, top 10, top 5% operator in the space, they have nothing for you. If they're not, if they haven't done it or are not actively doing it at a very high level, they've got nothing for you.
Yeah.
And you should be able to track back that they've actually done it. If you've got some guy that's, bought thousands of houses and he's just tired of the business piece and wants to go share his information, he's got a lot for you, even though he's not doing it today. But the guy that's telling you how to go buy houses that doesn't buy houses and has never bought houses, he's not the right guy or girl for you. They just don't know, right? They're trying to sell a sub.
Something else I see too is, and it's interesting because you talk to different, there's, like you said, Scott's got owner finance, everybody has their, even just the way you've explained it, that's like a hybrid of two different models. It's almost like someone's success is different for everybody, right? One person might say, I want 40 houses. The other one says, well, I don't want that many. I just want to be able to have enough to hold on to and whatnot. And others are like, we need that. And so I think that matter of, it's funny because everyone we've talked to just throughout the podcast is they all have different views, and their views on success are different too. And that's what's interesting to hear that, because it's just, some are like, I got to have it massive. And others are like, I don't mind being 2X. We'll stick with that. Others are like, we want 10X. And there's no other way around it, So it's nice to hear the different ways that people go through. They kind of like what they determine their own success is, versus just like it's got to be that. Because like you said, 100 houses, this or that. Someone else may say, I just don't want 100. I only want this or I want that.
My lead maintenance guy, he's recently started asking me a number of questions about real estate, about investing. He's just my go-to guy. He is gotten me out of so many jams,
Mhm.
right? He's as reliable as they come. Wouldn't be where I am without him kind of being the backbone of maintenance and CapEx issues on the real estate. So you talked about some people want 100. We've kind of built out a path for him. I say we. He and I have had some long conversations. We want to get him to 10 rental properties. He's first generation immigrant from Mexico. He owns 2 rental properties right now. I just loaned him money to go buy a flip. He's going to flip 2 houses a year, buy a rental. Flip 2 a year, buy a rental. He's going to do that for 8 more years. He'll have 10 houses, and he just wants to pay them off. He'll go from first generation immigrant to whenever he dies, probably $6, $7, $8 million bucks.
Yeah.
That's his path. That's what he wants. That's what works for him, and he'll change his entire family's future in 1 generation.
Yeah.
And that's crazy.
Yeah. That's the value of it, right? It's so many different ways. To him, that's life changing. Someone else, they
Beyond
may say,
life-changing.
yeah,
Yeah.
exactly. You know, someone else, they may say, oh, it needs to be this, needs to be that. I know, just like we would go like DFWI club and stuff, and you meet people, and they're like, they just do all the seminars and they pay all the money and they never buy anything.
Never buy
Like,
anything.
you don't buy anything. Like,
So you didn't ask about this, but I'm going to say it because it really bugs me. People go spend 30, 40, 50 grand on a seminar.
that's a down payment or less.
Go
That's-
lose the money on your
Yeah.
first real estate investment project. You will learn infinitely more. And by the way, you don't even have to lose it, right?
Yeah.
But say
Yeah.
if you're going to put 50 grand into a seminar and not use it, you are throwing the money away.
Mhm.
Go throw the money away per se in an investment property. Make some mistakes. You will learn tenfold, 100-fold what you're going to learn in the seminar, and it actually gives you building blocks to go actually be productive with the money in the future on different deals.
Yeah.
This analysis paralysis phase of seeing people going to all the seminars and not applying anything is just mind-boggling.
I think it's because there's so much information out there that they're like, maybe there's something else, or I got this next secret. We have this secret for you. There's that secret.
It's just a lack of discipline, though. It's just
Yeah.
this shiny
Yeah.
object syndrome of I don't know. I don't know this over here. Syndications sound great. What about
They feel
buying
like they
tax
can't
liens? What about
move without knowing everything, and
Yeah.
you'll never know everything.
right? You will
And it's
never
always
know
changing.
Yeah.
The best resource is resourcefulness. Just get in there and figure it out.
Yeah.
And if you've got the money to spend on a seminar, go spend it on a real estate deal. Even if you lose it, you're already losing it. You're already throwing it away on the seminar.
Yeah. You're going to lose
go,
it anyways.
Go take action. People just don't take action.
I agree.
Yeah.
So let's talk some deals. Let's talk
Okay.
some memorable stuff. I want to hear, tell us, as I mentioned earlier, I like, not to be a failure, but maybe a screw up or something, or jam. Maybe
I'll
you
tell
just
you a
jam,
failure.
yeah, maybe something you got in.
I'll
and,
tell you a failure.
so
Top of mind.
yeah.
Yeah. I've got my worst failure I lost, it's still manageable, but I lost like somewhere around $65,000 on a deal. And that does not account for the time. That was I think a 3 or a 4 year horizon.
Mhm.
I just kept digging the hole deeper. Man, I don't like high-end flips because of this flip. I really like the B and C class assets. They're widgets. They don't take any creativity. There's always high demand because you're buying below replacement cost. I say always within reason. The asset class is usually in pretty high demand. And whenever I say below replacement cost, it means if you were to try to build a house of the same size today on that land, it's going to cost more to build it than you can buy the existing asset for that's already renovated. So, below replacement cost, you've got some natural insulation from building costs that exist in today's climate. So, I think in the growth and maturation phase, you're trying to figure out what assets you like to buy, what asset class you like to play in. I knew that I liked the B and C class, and I said, but here's a good deal on a flip. That's a $500,000 or $600,000 deal, ARV, where I could sell it for $500,000 or $600,000. I'll go try that. See if that's something that what's my beak, what's my appetite. So I bought the worst lot in a great neighborhood. It backed up to I-30 and Welch. So if anyone's in Dallas, they can go look at the house because they know where 635 and Welch. They can go look where the deal is. So it backed up to the highway, and it was on a corner with a stoplight. A lot of traffic through there, a lot of driving traffic and walking traffic. But these are, it's right next to Jesuit High School, so it's a really good area that a lot of people like to be in. Ranch style, 1970s build, just an awesome house. Worst lot, best neighborhood. I discounted the lot for the location of what I thought was a sufficient discount. You talk to appraisers, you might discount that 10%, 12%. It's all a projection. It's tough to know because you've got to find the buyer that's willing to be on the 635 and Welch. And I was just a little green. I had bought probably 60, 70 houses at that point. I wasn't just a brand new guy, but I didn't know what I didn't know. So I think the rehab's going to be like 70. I spend $120. Those are approximate numbers. Put it on the market. House looks beautiful. But we spent months and months and months. I mean, my wife and I were over there 2-3 times a week. Layouts, floor plans. We moved a ton of walls, moved plumbing. I mean, it was a pretty heavy lift. Did all the majors. So we had a ton of time invested in it already. And at some point, you become emotionally invested because you spent so much time. It's kind of like your baby. You've been there, multiple times a week for months, and it turned out beautiful. We put it on the market. There's just very little traction. Other houses in the neighborhood are moving. Everyone comes. Whenever I say traction, we're getting showings. We're just not getting much feedback. We don't know what the problem is. So we're actively reaching out saying, give us your feedback. Give us your feedback. House is beautiful, but we just hate the location. You've got the noise from 635. You've got the walking traffic coming across the bridge. And you've got the stoplight. You've just got tons of traffic at all times of the day. It's not just the noise from 635, but the cars coming through that light. So it sits. We get an offer. And the offer would have had me losing, I'm guessing, about $20,000. This is just a guess. And then I think a day before their option period ends, they want me to put in a brand new air conditioner and replace the fence. The fence did need to be replaced, but the air conditioner was only like 5 years old. So I said, why do you need a brand new air conditioner? It's only 5 years old. And it was just this kind of snotty response in my head of, I can find something better than you. Get out of my way. But it had already been sitting for months, so I hadn't found anything better. So I decline their offer, their counter and the termination option. Sets on the market, and finally I just have no choice but to rent it. So I've got a private lender on the deal. I have to restructure the debt because it was a 12-month term loan, and now I'm going to hold this thing as rental property. So the private lender funds are stuck on that deal that I cannot reinvest elsewhere. The opportunity cost of having those funds in that deal cost me hundreds of thousands of dollars. I didn't even think about it. Rented out for 3 years. I think 3 years, and I think I sold it somewhere around 2021. So things had, appreciation had been on an uptick for 3 years from like 17 or 18 to 21, right? So it tells you how bad of a deal I did that I still lost $65,000 on that deal. The tenant just destroyed this house.
Yeah.
Absolutely destroyed it. And this thing was a redheaded stepchild. I had already hated the house. So I wasn't keeping as good of an eye on the asset as I should. It was just this, like, I don't want you. I want to do everything I can to get away from you.
I don't want to look at you.
I don't want to look at you.
You don't exist.
In the middle of this, before we realized the tenant damage, I think it was just one, but a car ran into the house because there was a drunk driver that came through that intersection at like 7 o'clock in the morning on a Saturday. Gets T-boned.
Wow.
There was this big boulder. This thing.
He was just
thousands of pounds.
He's just heading home.
And he started running home on foot too, and nobody caught him after he wrecked the car. But his car runs into this boulder. The boulder shoots through the garage. Luckily, did not hit any of the brick. Only hits the garage door, but nails the tenant's car and like shoves it into the front wall. So I already hate this house, and I love college football. And I just remember I'm sitting on my couch at like 9 in the morning watching College Game Day. And a cop calls me. Hey, are you Zach Coppinger? Yes, what can I do for you? Well, we got an issue over here at this house on Thunder. I said, oh my gosh, what is it? Well, there's a car accident and it hit your house. I'm going, I cannot catch a break with this stupid house.
You're like, is it totaled?
Yeah, please, insurance, like burn it down. Did it catch on fire or something? So go over there, handle the issue, spend some money. I think the fix was only a couple $1,000, but it was just this feeling of this monkey on my back that I can't get off. So whenever that tenant finally moves out, I mean, they had multiple dogs. You go in there and you're coated in fleas. They urinated all over these, 5-inch natural white oak floors, all the carpet. I think it cost me another roughly 15 to 18 to get the house ready to sell. Finally sell it for just slightly above the price that that woman that I told to pound sand was going to net me, and I lost an extra 40. I don't know exactly how the math all worked out, but I know on my books that I booked a loss of about $64,000. So that doesn't account for any of the time that I spent for years and years and years, and the opportunity cost of not being able to use that private lender's funds on other deals. I do not like high-end flips. I do not do them anymore. That was my last one. Is there opportunity that I am missing? I don't look at it that way. I'm just not good at it. I'm not creative. That's not my thing. We spent so much time, my wife and I did, on that house, thinking of the layout, thinking of the materials, going to Dow tile, going to floor and decor, looking at pictures, on Pinterest, whatever it is. There was so much time invested in that that's just not what I'm good at. I'm really good at the widgets in the B and C class where I don't have to think. It's just the same color palette. It's the same materials. It is, you can just spit it out really fast, right? There's not a lot of creativity involved. And that even transcends into kind of my investment thesis is I just go find someone that's really successful and I just try to emulate what it is that they're doing. I'm not reinventing the wheel.
Right.
I have not a creative bone in my body. And I don't think you need to have one.
Yeah.
If you do, fantastic. Your brain works in different ways than mine does. But that's the horror story from a amount of money being lost. I've lost money on 3 deals. That one was 65. The other ones were both below like $5,000. So those were pretty small misses.
That guy did not hit the house hard enough. He should have hit it. It sounds like he should have hit it harder.
He hit the boulder freaking hard because that thing, we had to get a tractor to pull it out of the garage. Yeah.
You're like, you need to go faster. Go find the guy. Like, you're not going fast
That's
enough.
the horror story from just kind of most money lost on a deal.
Yeah.
But there's some interesting situations we've been in. I've got an interesting story from a house. Didn't end up buying it because I couldn't make the numbers work. The city got involved. But this was a nice house in Preston Hollow. I think it was 3,500 square feet. Nice neighborhood, but these were really close to being zero lot line. So you were within 15 feet of your neighbor. The setbacks were really small. So you're crammed in there like sardines, multi-story 80s builds. This couple had bought the house from California in cash, I think about 10 years prior to me being called in to go make an offer on the house. So if you're paying cash for a house in Preston Hollow, you have some level of sophistication, unless you just inherited the money, which they didn't. I found that out. There's some level of sophistication there to think that you've got some parts of your life together. I don't really know what I'm getting into going to the house, but the precursor on the call is, hey, it's pretty messy. Okay, we deal with mess all the time. That's not a big deal. Go to the house, and I walk in, and they look a little disheveled. The house stinks, but in the entryway, you can't tell that much at first glance. When you start looking, and you start listening, the wife loves rats, pet rats. She bought a male and a female pet rat whenever they moved in, and she did not keep them in cages.
Oh, man.
She let them procreate. We're talking hundreds and hundreds of rats living inside the house. They have chewed through almost all the electrical. They've chewed through copper pipes. They have ripped up every single piece of flooring in the house. These rats just defecate and urinate everywhere, and they always run along the baseboards, right? So there are these dark brown kind of marks this wide across every single, along the floor of every baseboard in the house, kind of along the perimeter of the floor, and that's all the feces they've just been dragging everywhere. They are trying, whenever they chew through the water lines, there's no water source in the house, so they've got to get out of the house. So they're chewing through doors, chewing through sheetrock walls. This thing is ridiculous. They've got a dog, too. The dog is terrified of the rats. So we're standing in the living room. With sellers, this is how they live, right? You're not trying to make them feel like you are just really disgusting human beings.
Yeah.
So you're playing it cool. But they've chewed through a lot of the electrical, so you've got these lights flickering. There's no water in the house. The air conditioner doesn't work. It's the summertime, so it's just muggy and hot. And the dog sees a rat. And we saw probably 30 rats while we were there. It's not like they're hiding. Just kind of a mutt, like 50, 60 pounds, older dog. And he sees this. He's sitting there. I'm here in the living room. I'm here. Rat's running along this way. Owner's here. Dog's here. Dog sees the rat, freezes, and just takes a dump and urinates everywhere. And that's just normal. And he's petting his dog. Oh, it's okay, buddy. Oh, it's okay. Going, what is wrong with these people?
He's over here like, I'm about to get a big discount. I smell money.
So the amount of damage the rats did to this house is pretty incredible. The neighbors finally got fed up. They've been calling the city for a long time. They said, this is unsanitary. These people are disgusting. City gets involved. They put essentially some kind of work order on the house that requires a certain amount of work to be done to get the property up to standard conditions. This family doesn't have the money to do that. So they're essentially being forced to move, right? But part of the remediation, an agreement they signed with the city, was that they would actively remove the rats from the house. So they had to seal up all penetrations from inside and make sure rats couldn't get out so you could trap them inside the house. And they agreed, kind of in written order, to the city that this is what they were going to do. And the city hired a third party that was going to come, or the owners were forced to hire a third party that the city approved to come do the rat remediation and get some of those rats away. And the husband, he looks at me while we're walking, because he had started to tell me about this remediation that they were required to do. And he said, "My wife opens the door and lets the rats out at night." I said, what are y'all doing? Like, what is your end game here? The city's already on your tail.
Yeah.
You're having to move. And this woman just loved the rats. These were her babies. But they slept in this house, and these rats would like crawl up on their bed, crawl over them. These are not the rats you buy from like a pet store. These are just disgusting, filthy rats covered in feces.
That's wild.
And the smell, you get used to it. You're not blown away by a lot of the smells. This one was about as bad as I can remember, just because, yeah, the amount of just.
How did they shower? There's no water source.
Yeah.
Yeah, there's a couple unanswered.
There actually, some of the water lines did work. There was a pool out back. The
They
pool was
just
kind of
went
half filled
swimming.
with water. They might have done that, seriously.
There's some unanswered questions here.
At some point, you don't want to ask the question because you don't want to know the answer. And you don't want to make them feel bad. I mean, I think, is that the best they could have done? No, but that's how they lived. That was their life. My job was not to
They're in the wrong neighborhood.
reprimand their lifestyle. They were in the wrong neighborhood.
Yeah.
I couldn't make the numbers work though. The work required was in the hundreds of thousands of dollars whenever the city was going to have their eye on it.
Yeah.
Couldn't make the numbers work, but that one vividly sticks out to me as
You think if
just
the
a
city,
disgusting
the city didn't get involved, you probably could have been better off.
I was
You'd be able to-
I was already in the thick of that house I lost $65,000 on. So I wanted to wholesale the deal. I wasn't going to take it down and do it myself because this would have been a rehab kind of ache into that one, which was a higher end $700K deal. I just said, I've learned my lesson. I'm not going to do that.
Yeah. So it's funny you talk about the smells. I remember we were when COVID hit and we were looking at a house to buy, and it was just a dump. And I remember going in and being like, "Man, this is awesome. You can't smell anything." Yeah, because some of you smell, you're like, "Ooh, ooh, ooh." But I remember having COVID and going through some houses, like, "Oh man, like this is."
I
That's
do
great.
remember, a couple times that I would, like, whenever I get sick, period, I can't really smell that well. I
Yeah.
remember buying houses in the wintertime, and I would try to find a way to ask the seller, are there any smells, without being, like, rude? Because you'd see a pet, and it looks a little bit dirty, but if they've had a cat
You gotta take
urinating for
someone with you.
decades, and it's, like, stuck into the floorboards, into the decking, or into the concrete, there's some additional cost for the remediation there. And I've got a stuffy nose. Does it smell? I
You need a
I can't
smell-o-meter.
tell. Yes. But there's also some eviction. We're doing a tough eviction right now. There's a gentleman we've been working with for, I'm guessing, going on 14, 16 months. His son, I think his wife passed away. His son moved into the house. He had some bad memories of the house, so he moves into an apartment complex just to kind of clean the slate. But he still owns the house. His son lives there. His son's an alcoholic. He's kind of dealing with his own grievance issues with his wife. Doesn't really check up on his son, but he knows his son is not a normal functioning human being. He's an alcoholic. Well, he kind of ignores it for a long time, and then his son just trashes the house. Totally trashes the house. But he doesn't have the gumption to evict his son because his son, he being the dad, is paying the property taxes, paying the utility bills, paying everything. His son's not reimbursing anything. His son sits at home, gets drunk every day, and does nothing. So he, after like 7 or 8 years of this, he reaches out to us. He hasn't been in the house. He doesn't know what kind of condition it's in. This is my recollection. He is able to lure his son away from the house, so we can at least go in and get our eyes on it. We get our eyes on it. It is like 3 to 4 feet of trash that's been compacted down by him walking on it. And it's not like a big box that he threw down. We're talking water bottles, McDonald's bags, like anything that you have in a trash can. It's like it just got dumped out on the floor. 1,539 square foot house, plus 2-car garage, plus the entire backyard, just covered, completely covered. And he doesn't have the gumption to evict his son, but he says, look, I'll essentially sell the house to you guys, but you have to handle evicting my son. So we buy the house, we evict the son. The son has no resources, doesn't have a car. We still don't know how he did it. He appeals the eviction. And it was this weird, he got lucky on the appeal because there was a holiday in between. So we initially thought his appeal window had already ended, but he appealed and it was within the time frame because I guess the Monday or the Friday was a holiday. We don't think that he knew the difference. Either way, he appeals. He appeals. It takes us a while to get a new court date.
What's the time period of this? Was it
so
during COVID or anything?
No. This
Okay.
is like this all wrapped up yesterday.
Oh.
This is very fresh. He does not appeal the second time, but from initial eviction proceedings to the first eviction, it's somewhere around 21 to 30 days. He appeals. It takes us forever to get on the docket for the new court for the appeal. So I think all in, and I'm guessing we're somewhere around 90 days.
Is this Dallas County?
This is Dallas
Okay.
County. Somewhere around 90 days. We finally get the writ. We get a date for the writ enforcement. We tell the constable, this house has a lot of stuff in it. Well, how many square feet is it? Okay, it's 1,539 square feet. Okay, how many bedrooms? It's 3 bedrooms. Bring 4 guys. There's a lot of stuff in here. We're going to bring more than 4 guys. If you want to, that's fine, but you only need 4. Okay, we're going to bring 7. By the way, there's a ton of trash here. It's all trash. And then they just kind of give us we'll see when we get there. We get there. We've got the most strict constable I've ever met. She wants everything put in trash bags and set out on the front. And she initially tells us if you don't get it done within 1 day, you've got to put it all back inside and come back and do it again tomorrow. And we make her go into the house with us. We said, look at all of this. There is no way. We'd have to have 25, 30 guys here to be able to get this done in a single day. It's just unreal. So she's not budging. So I say, hey, is there anyone that can make a call different than you? Do you have a supervisor that can make a different call? I understand that you've got to follow things by the book as you read it. Is there someone that can make a different call? And she kind of stiff arms us. This is my call. This is what we're going to do. Okay. So we start working. We call in some additional hands. So I think we had 10 hands there. This was on Monday. And it barely looks like we got the living room done. We've still got, kitchen, dining, breakfast, and 3 bedrooms and 2 bathrooms. And there's so many bags sitting in the backyard. If you look at how much stuff was removed, you think, wow, there's a ton of stuff that got taken out of there. You go walk into the house and you go, man, there's nothing. So, constable says, constable shift change comes at lunchtime. So a new constable shows up, but he's not the initial. He was not the initial constable that was enforcing the writ. He shows up. He says, "What are y'all doing?" I said, "Well, following the direction of the prior constable. She wants us to remove everything and put it in bags." He goes, "Well, that's stupid. I wish you were here 4 hours ago. I completely agree that's stupid." I said, "But it's her call. I'm just kind of I'm filling in the gap, right?" So he stays with us the rest of the day. He knows that we're not going to finish because we're not even close. And he says, all right, there's a fence in the back like a gate that closes. You guys can just close the gate, come back again tomorrow. So he meets us there at 8 o'clock, 9 o'clock in the morning. I say my guys, and we start up again. And they worked till 2 o'clock yesterday. And that constable, I don't know why we couldn't have gotten here 48 hours ago, but he says, I give up, just trash it all. So now we got to basically stop and freeze what we were doing, where we didn't have to pull it out on the curb. Because if we had to do what they said, we were going to have to pull it all out on the curb, put it all in bags, have it sit for 24 hours, then remove it all from the property. So essentially doing the work almost twice. So he finally just called it yesterday at 2 and said, I'm tired of sitting here. There is nothing of value. Everything that we kept pulling out, we pulled out thousands of those water bottles filled with his urine. Buckets of his poop.
But it was his property, and he had to make
know,
sure 24 hours it was going to be on that
There could have
curb.
been a receipt underneath there that he needed.
Right.
Imagine this trash, just 3-4 feet tall in the house. He would just lay down on it. That's how he would sleep. He would sit on it. So his head's almost touching the ceiling, just sitting up against the wall, sitting on all this trash. The guy was not well, right? But the most frustrating piece of it, I knew he wasn't well. The most frustrating piece was just the constable making us. It's going to cost me $8,000 to $9,000 to trash out that house.
Yeah,
that's wild.
And you're giving me you're burning time and energy and
making me do the work twice.
money and you could versus just pulling up the dumpster and be like, all right guys,
And anyone that was
throwing it in.
objective could look at it and say, it's obviously all trash. It's all covered in his urine and his poop anyways.
Yeah.
Like there's not even any furniture here.
What makes you think what are you just kind of thinking back on it? Why do you think that one constable did that? Do you think
She said that she's been sued in the past for a similar scenario where she was named in the lawsuit where they deemed it all trash and the tenant comes back. I had valuables there. And then how do you prove that up?
So she's trying to protect herself.
Trying to protect herself.
She wasn't trying to be an ass or anything. She was just, or do you think she was?
I don't think that she was intentionally. I don't think she was doing it just to say I want to be difficult.
Mm-hmm.
But I think we got the wrong draw of constable. Because I think most of them would have just said, "Oh my gosh, that house is a piece. Just go ahead and trash it all."
Yeah.
Because if you've got a 40-yard dumpster with wheelbarrows, it's much faster just to put it on a wheelbarrow and dump it into the dumpster than it is to pick it all up and put it into trash bags, tie the trash bags up, and go set them out on the curb.
Mm-hmm.
Yeah.
Yeah, it's a lot more work to get it organized, to get the trash organized, right?
Yeah. Organize the trash, guys.
Yes.
Get your gloves on.
And it was just really unsanitary. There was no utilities, so it was super hot. And you guys know it's been 103, 104 degrees this week.
You
said there was pee bottles and poop buckets.
Yeah.
Ooh,
it's nasty. And we talk about rats. There's got to be rats underneath all that trash. We have not gotten to the bottom layer yet, but I'd assume there's going to be some
It was
friends.
the ladies, the rats.
The rats didn't even want to live there.
No.
the ladies' rats were like, well, if they're kicking us out, we're going to his house.
That's probably the worst eviction story. And even so, like you plan for it.
And where did he end up?
So the dad had a friend who came and drove him to a shelter in Corsicana.
Good.
Wanted to get some distance between him and the house. The story's so funny. I've never seen the guy that lived there until the morning of the eviction. We knew he existed. He didn't appear in court. He no-showed in court and then appealed. Then no-showed the appeal and did not appeal the appeal. So we didn't know what he looked like. So we pull up at, I think the writ enforcement's at 10 a.m. We pull up at 9:40, and he is loading up his car, or his dad's car, one of the two. But he's in boxers, that's it, and rubber gloves.
You got to keep clean.
I'm just wondering, what is he protecting himself from? Because he'd been living in there for a decade. Boxers and rubber gloves.
So we've shared this story on the podcast with us. It makes me think of we were purchasing the property some time back, and we're on the option part, right? Like we're going to go look at it. We're looking through. Well, it's a fourplex, the units, and we go look at the last unit, and the person who lives in that last unit was like, "I need you guys to wear masks." Like, fuck. All right, you got to wear a mask, and they gave all of us a mask. I'm like, oh man. And then you walk in and it hits you with that cat shit smell. And there's cat poop all over, urine all over the stairs and the steps. And she's like, sorry for not cleaning up. And I'm like, and I got to wear a mask. I'm like, what the fuck am I wearing a mask for? Is it my protection or your protection? Because right now I'm
I'm
like
concerned about her kids, as bringing stuff in. And we're like,
people,
they live in this.
People are crazy.
They do some weird. I'm like, why? I'm like, we went and saw all the other units, right? And then there's that one unit, and I got to wear a mask. That she gave us the masks, and that's the worst part. I'm like, fuck, I gotta wear this mask. I'll never forget like putting on and going,
where was this mask?
Yeah.
I did it. I took it for the team because I wanted to go. Did
you buy the fourplex?
We did.
Oh, there you
go. It was a damn good deal, by the way. That got us 40. We took $40,000 off the price because
pictures of that unit, 48 down.
40 down. But it was one of those like you're like, why in the like. I remember like putting that mask on and just going, oh, this is so gross. Like I just, and then my mom and dad, we invest with them and stuff. My mom's like, yeah,
just chatting it up.
She's just like,
let's get out of here.
she's like, she's like Martha Stewart now. If you ever see her, like her house, like it's like clean, pristine. But she's like, yeah, I was around this shit as a kid. So yeah, it's not a big deal. I'm like, fuck man, the mask, I'll never forget like how, but this, talking about the smells, they almost all smell the same. at some level, right? There's that
Yeah.
has that same distinct smell that
And
you're like,
the mom was yelling at her kids for leaving his pants on the floor, and I'm
Oh
like, "What
gosh.
about the cat shit on the
Yeah.
stairs?"
You know, whenever I
I
got
can
started,
deal with pants. That's
I
fine.
had this fear that with how many investors were coming into the marketplace, that
Yeah.
all the distressed deals were just going to get bought up. Like, how much could there possibly be? How many nasty houses like that could there possibly be? The answer is far more than I ever thought there could
there's
be.
plenty.
Yes, there's plenty. And not every situation is that level of distress, but if you just let a property sit with no maintenance for 5 years, 6 years, 7 years, it's amazing how much the structure degrades over time
Yeah.
without consistent input, whether it's just kind of nature or cats and dogs being a part of it. It's, yeah,
They'll go down.
they go down.
So, any home runs or anything that you're just like, man, that was probably one of my best or most favorite deal that you were like, that was.
I fell into my biggest deal.
Yeah.
I knew it was a deal. I didn't know it was as good of a deal as it was. I got a call like on a Saturday night. I think I'm in a like in a store, like a Target or something, and I get a call at 8:00 at night from some marketing, and it says, "Hey, I've got this duplex over here in 75214. 75214. Me and my sister both occupy one side. It's on Ravendale. My mom left us the house. I haven't paid my taxes in a long time. So mortgage company's about to foreclose. There's a federal tax lien on it that exceeds the value of the property. We don't know what to do. We've had multiple people that we've tried to sell it to. They've told us that we can't." So I said, "Okay, I'll be there tomorrow morning." So we're kind of against the clock on the foreclosure. I get there the next morning, and it wasn't the nastiest thing I've been in, but she had cats that she didn't keep very well, and her sister's unit was pristine. Her sister's unit was very clean. Her sister took care of her business. She, the woman that called me, did not take care of her business, did not pay her taxes. So you've got a duplex that is a singular structure with two different legal descriptions, but it's delineated by a half lot, right? So the federal tax lien is indexed against the woman that called us, but they inherited the house from their mom, but the title has not been vested from the mom over to them. So we're unsure how the FTL is going to play out. Does it encumber half the property? Does it encumber the whole property? Could we get a partial release? We don't know. I ran some really quick comps on duplexes before I went, and I'm just on Nitrous, the MLS, and I just run residential quick, and I run MLS comps on duplexes, and there's not many duplex comps. But I know what they owe. I know what the amount of the FTL is, and I know the condition's not very good. So they're just hoping that they can maybe get a few $1,000s to go walk away, because they've chalked it up as a loss from poor decision making from the sister. So I get under contract at a number that I know works with the comps that I pulled. So we go petition the IRS for a partial release. So they'll release the lien against the property in exchange for whatever proceeds would have come their way, which wasn't very much because the mortgage was taking up the majority of the proceeds because they hadn't paid that in, I think, over a year. So we're talking about a lot of arrearages, and they inherited this thing with a good amount of equity in it, just made very terrible decisions to get to that point. Amazingly, there was a caseworker from the IRS already assigned to that specific asset. It was within a portfolio, so to speak, for the IRS agent. Because sometimes you're just calling the IRS in general, saying, "Someone help me with this." There was already a caseworker on it. Caseworker is very responsive, which is very atypical from the IRS. We get a partial release done within like 30 or 35 days. Right before, this is after closing. Because there's a partial release, I can't really assign the property because if I'm trying to assign it and make some money, the IRS says, "Well, wait a minute, where's this $30,000? They have to approve the settlement statement before they'll issue the partial release. Mm-hmm. We're not getting all the funds. We're not issuing the partial release, right? We did negotiate that we could funnel them like, I think $3,000 or $4,000, something small where they could have some moving expenses to go move. Ironically, they move like 3 duplexes down on the same street. But after I close on it,
check up on that property.
Yeah. Right after I close on it, I just was messing around the MLS, and I said, "Let me go look in the multifamily section of the MLS," because I hadn't done that. I'd only looked in the residential section, and oftentimes the agents will put duplex comps in the residential section, not the multifamily section. I go look at the multifamily section. This thing is worth double what I thought it was. So I was going to make 25, 30 grand on it. That turned into $192,000. Didn't know that until after I had closed on it. That was my biggest kind of flip, quick wholesale fee. And I was going to make money either way, and I solved the problem that no one else could have solved, that no one else was able to solve, not that no one else could have solved. She'd already been told no by multiple investors prior. But there was some luck involved with the skill, and the luck was that the numbers worked out the way that they did. And the luck was I miscomped it very, very low because the comps that were available on the residential section were from a different neighborhood. They weren't the exact same neighborhood. They were from an inferior neighborhood, but you got to compare to whatever you can find, right?
Yeah.
And I thought that's all that I could find was something a couple neighborhoods over in a different zip code. So I got the upside on that one.
That's killer. You said
Yeah.
192.
Right around 192. Yeah.
That's awesome.
Yeah.
That's a good chunk.
It's a good chunk, and that one came fast, right? That was a 4-month turnaround.
Yeah.
With the rental properties, like I've got a tranche that I'm selling right now. I think each one of them is making about 200, but I'm trading those up into an apartment complex. So you never get to touch the money if you're doing a 1031 exchange. So it feels a little bit different if it never hits your account.
Yeah.
So there's about 850 that we're pulling from a tranche of, I think, 4 or 5 properties that we're going to go invest in that apartment complex.
And you mentioned that earlier. I did want to touch on that.
Multifamily.
Kind of like what your plan was. You said it kind of touched on that a little bit, or kind of go through that a little bit. You're saying, hey, you guys are ready to start selling off, and you're wanting to,
Not selling off, ready to start trading up.
trading up. But I mean,
Yeah.
but you're wanting to grow.
So the return on equity, we talked about that a little bit, was low
velocity.
single digits, right? So
Yeah.
I've got a couple $100,000 equity in a house, but the cash flow, I mean, I'm making a few $1,000s a year on the property,
Mhm.
making a few thousand off of $200,000 in equity. The return on equity is very low. It's very safe, but if your goal is to maximize return, you need to get that money moving into another investment because it's pretty static at that point
So
in time.
Is multifamily what you're eyeballing? I know you mentioned self-storage, or do you have a certain one you're like, I want to spend more time there, or is that kind of...
It kind of depends upon the opportunity and depends
Yeah.
upon the operator if I'm not the operator. I've got some active positions, some limited positions in some deals. So it's kind of operator, geographic, and asset specific. So a lot of it, I would say more of it's in the value add multifamily space than it is in self-storage. But I'm pretty interested, in industrial flex. There's some, if you think about it, like a metal industrial building, it's a metal tilt wall building with concrete. There's very little that goes wrong with a metal tilt wall building with concrete.
Right.
Not saying something can't go wrong, but you've got a business level tenant, not a residential tenant. They operate their business out of there. Sure, they might be a little bit messy, but by and large, you've got a structure that's pretty bare.
She's
right?
laughing because we own an industrial building like that, and we had a cabinet shop. And we had to clean them the fuck out. It was so messy.
So
never do. We will never ever have a cabinet shop ever again. Take that space. Take any space for that matter. But they stayed forever.
Yeah.
But we had to raise the rent and evict them.
I've got a buddy that bought a Granite Shops, I think a Granite Shops metal building, or bought a metal building that had a Granite Shop as the occupant. Granite Shop quits paying. Oftentimes you got to pay by the pound to move trash.
Yeah.
Thousands
Heavy.
and thousands and
Oh, man.
thousands of slabs. He knew it going in, so he allocated for it in his demo budget and his trash haul budget. But they worked on just clean out for I think 3-4 weeks.
That's
And it's also not just inside; it's on the property. So you've got what is it, acre and a half site, 2 acre site. You've got stuff.
Yeah.
Let me get one of them countertops.
But I like the owner finance notes because they were very automated. Once I set them up and got them originated, we've got a servicing company that pays us. They do require some oversight just to make sure that we're getting sent the right amounts. If there's any delinquencies, we work on those with them. But that's the most passive form of income that I've been able to generate in real estate is the owner finance notes. The residential real estate properties, residential single-family rental properties, required a lot of my input. They were not very passive. I've got a friend that's operating in the industrial flex space with a lot of triple nets, and he's really liking the triple net nature of the leases, where He just kind of collects a check. Once he finds his tenant, now you got to look after the asset, make sure that they're not the cabinet shop, make sure that they're trying to, they're keeping good care of the asset, but they're responsible for insurance, for taxes, for maintenance. So I thought about, I'm interested in that asset class. I haven't bought anything yet, though.
It's just vacancy. When it does become vacant, sometimes it could take quite a while to replace them.
Yeah, it takes a little longer. It takes a little while. But once they're in, though, I mean, they're there for so much longer, and like you said, it's just less.
The tenants aren't really grifters, right?
Yeah, it's less maintenance, and like you said, the triple nets, and that's
But some people really dog on multifamily, just from the sense of it's really difficult. The tenants are difficult. I'm not saying that they're not.
Yeah.
But if you want an asset that's constantly in demand, affordable housing isn't going anywhere.
Yeah.
It's going nowhere.
Yeah.
Now, if you can stomach dealing with the tenants and you've got an operator that knows how to operate the asset, you can do really well in the space.
So are you going to keep a couple residential, or are you just going to trade up everything pretty much? Just, I mean, kind of what's
It's not easy trading up a portfolio of about 40 houses. Like, you have to do
Mm.
it in tranches, and I'm still acquiring. So
Right,
I
right.
bought, I think, 4 or 5 rentals last year. I think I bought 3 or 4 this year. They're a little bit harder to make the numbers work, but I'm still acquiring. So there's subtraction, there's addition each year. But these rental properties, they're not ready to hit the market whenever the tenant moves out. There's some renovations required to get them market ready, unless you want to sell at a pretty big discount.
Do you want to get to a point where you've traded everything up completely, or are you like, I just want to keep a couple maybe for the kids or whatnot?
So-
Does that kind of go through your?
I'll touch on 2 things. It's evolving. The majority of my time as an operator is still spent in the single family space. So
Yeah.
I still have opportunities that are coming to me. If there's a really good opportunity in front of me, I'm not going to turn it away just because it's a single family deal.
Right.
But my thesis going in now is hold it 5 years, hold it 4 years, some kind of shorter timeline to trade up into something else. It's not build a big portfolio and keep it forever. The caveat is, whenever my daughter was born, I don't know what the education landscape looks like, but I don't want to have not saved for education in some capacity. So you've got the 529s, you've got the Coverdales, I think is what they're called. I didn't want something that could only be used for education. And me being an alternative investment guy in real estate, I said I can beat market returns in real estate. So I formed a separate LLC that's just the education LLC, if you will, for our family. So I'll put 2 rental properties per kid in there. And I'm buying quality asset. I'm not buying the cheapest deal I can find. So these are 90s and 2000 builds, or what are in there right now.
Yeah.
And I think the plan is to hold those through their education horizon and have those as the bank account for whatever education expenses they might have. I think I'll be able to bankroll their education, but I'm not going to hinge their future on daddy's thought that he can do what he thinks he can do.
Yeah.
Right?
You can be like, nope, we're going to make sure.
Yeah.
Whatever college, if they decide to go to college, buy a multifamily property over there, and that way you have a lot of college students.
Yes. Yes, thought about that.
Bring your friends and make sure they write the check to.
I have no idea what the college landscape's going to look like, what the education landscape's going to look like. I think it's ever evolving. My wife and I were talking about this a couple weeks ago. I think within maybe a generation and a half or 2 generations, the sentiment will be, do whatever you can to get to college. If you can get to college, you can make it in America in the middle class. And I think that we are already off the peak, coming back down to college isn't worth it.
Yeah.
Like, it's so expensive. And if you don't have a direction, if you're going to college because, I don't know what I'm going to do next, I'm just going to go take out a loan because the government will give it to me. Within a very short window of time, college has become, if you can go, to, do you really think you should be going? What's your plan?
Being a student is a career now.
Yeah.
Yeah.
So I think the landscape's going to be very interesting.
I'm on the complete opposite side. I actually dropped out of high school at 17,
Okay.
just so I could do more jujitsu and go open my own business. That was kind of the thing. But I don't think there's a wrong way of doing it. I think everybody has their path or whatnot.
I think the wrong thing is not having a plan.
Yeah.
I think that's the only wrong thing.
That's the only wrong
is being
one.
listless, being a ship that's just blown in the wind, not having any kind of course or
Yeah.
direction, right?
I don't think that. Yeah, there's because you see guys from everyone from a high school dropout to someone who's been in college, and they're if they had the right mindset, they can be successful. It didn't have to be A or B. And I think
The
that's
questions that aren't asked, which is amazing, right? Because if you go try to borrow money from a bank on a piece of real estate, okay, how much income will it produce? Well, that's a really good question. I got to know if I can service the debt, right? And now you get a loan for college. There's no question of, well, hey, the major that you want to get, you're wanting to major in English. What's your earnings potential with that degree? How
Mhm.
are you going to possibly pay back the debt? There's no talk about repayment. I just think it's the system is broken. But I think there should be some thought into, if I'm going to take out the debt, how am I going to pay it back? And what kind of degree am I going to get? What am I going to do with it? What's my earnings potential? Yeah, I think student debt is just tossed around like a toy without much thought into how to satisfy the debt.
Yeah.
Yeah.
They go get a major in something that they can't even
You
pay
can't
back.
monetize. Yeah.
They're like, man, you got a major in something random, and then they're like, well, I can't do anything with it. Yeah, I can see
So
that.
I definitely don't think college is wrong. I don't think not going to college is wrong. I think what's wrong is if you're 18, you're mature enough to have some kind of vision or plan. Doesn't mean that you're locked
Mhm.
into it and you don't change, but it means you just got something that you're working towards.
You
Yeah.
have a
Yeah.
compass.
Yeah,
Yeah.
you got some kind of compass. You're pointing in some direction.
Absolutely. Well, let me ask this before we bow. I always like to ask this kind of towards the end here. What advice would you give somebody, whether, just from all your experience, and doesn't have to be for someone new. It could just be across the board, period. Just say that as far as everything you've gone through, all these years, what advice would you give somebody?
It's a good question. There's a saying that I really like, and I think everyone could apply it and better their lives, and it is common discipline yields uncommon results. So doing the work every day, and it can be fun. It doesn't have to be arduous, right? Like, I really enjoy what I'm doing. It's hard work, but
Yeah.
it's rewarding every day. And then I would say the grass is not always greener. Put your blinders on. Find something that you enjoy that you're good at, and don't be blinded by every shiny object along the way. Because let's say that you start at the age of 25, and your initial goal that you set on is buy 2-3 rental properties a year. You look back 10, 15, 20 years down the line, you're talking about 60 properties. Now, that was my kind of initial goal, and I veered off that course. But by and large, I'm still pointed. If I was going north, I'm going north. I just may be a few degrees off going a different direction. But by and large, the path stayed the same. I'm not getting rich enough fast enough in real estate, and then decided to go do Amazon
west.
stores or
Yeah.
solar energy or whatever the next hot thing was that everyone keeps breaking off to go do, right? Find something that you're good at. Find something. It doesn't have to be a big moneymaker. Know what your lifestyle requires. Find something that you really enjoy and just focus on it and get really good at it. And for some people, there are income requirements to do that. For some people, they can make 70 grand a year. That's all that they make, and that's all that they need.
Yeah.
Don't focus on what somebody else is doing. Focus on what you get maximum enjoyment out of and what allows you to live the life that you want.
Yep. I love it. I like that. Pure focus, man. And, well, say that again, the discipline. You said the common discipline.
Common discipline yields uncommon results.
I like that. I haven't heard that.
So, yeah, common discipline just means
the way you said it, I have never heard it that way.
it's everybody can do it.
Yeah.
It's not out of anybody's reach. There is no education required to have common discipline. There is only the mental fortitude to commit to yourself that you're going to do something. And if you do it long enough, your results will be very uncommon.
Right.
Most people don't have the fortitude to keep doing it. Yeah.
I like the way that's put. Discipline's a big deal for me. I like that. That's like the number one thing. But the way you put it, I've never heard that like that. I like that. It's a nice saying. I'm stealing it if you don't mind.
Go for it.
The way you-
I stole it from somebody else. I didn't make it up.
I know.
Spread it.
I just say it, man. Mine's always, discipline equals freedom, that kind of stuff. Just the whole, because whether it's whatever it is, just discipline and focus are so huge. And that just comes from jiu-jitsu and stuff. But the way you put that, I'm stealing that. So,
And the last thing that I would say is technology, today's day and age, has made it very easy to be very impatient. And this kind of compounds off of the common discipline yields uncommon results. We want everything and we want it today. All good things are worth working for, right? If you 99.999% of us are not Mark Zuckerberg, are not Elon Musk. We're not going to become billionaires essentially in a 4 or 5 year period from inventing the next crazy thing. It's going to take a lot of diligence and hard work to get somewhere, whatever your milestones are, right? So just don't be afraid to put your nose down and do the things over and over and over again for a long period of time. Don't expect it to come tomorrow.
Just grind.
Yeah.
Just grind.
Absolutely.
Yeah.
Well, I love it. Zach, man, thank you for coming on. Is there any, so I know GoodBuy Homes, if you want to talk about kind of just, how to, if someone says, hey, I've got a deal, or they want to reach you or whatnot, what are they?
So I'm a pretty bad millennial. I'm only really on Facebook.
Yeah.
I have a LinkedIn account I don't
It's
check.
okay.
I don't have TikTok. I have an Instagram account I don't really engage with. So Facebook, Zach Coppinger, you can find me. I post some stuff about real estate. Name of the company is GoodBuy Homes. We buy and sell. Do kind of all-encompassing. I do wholesaling, flips, rental portfolio, owner finance portfolio. We actually didn't talk about this. I do a lot of hard money loans.
Yep.
I say a lot. I'll do 40 or 45 this year. So with excess capital, I just loan it out to investors that need it, mostly in Texas, or only in Texas, mostly in DFW. But reach out to me on Facebook if you got any questions. If you need money for a deal, if you have a deal that you need to help move, happy to talk to you about it.
Oh, killer. Well, Zach, thank you for coming on. I
Thanks for
appreciate
having
it.
me.
And man, killer stories. And guys, thank you for listening in, and we'll catch you guys next time.